This is on a whim here. Good morning, good afternoon. Okay. Sorry. Off of my regular routine. I was talking to James earlier. What's happening, Lisa? What's happening, Earl? And we were talking about the ignition bar setup where it's setting up right now in real time. And I was going through it, and me and James were talking, and I was like, well, let me just go live, and we'll talk about this and how this bar sets up. Because sometimes I talk about trade setups. I know we have, it's on the website, and but it's always good to kind of go through stuff in real time just to give people context and color. So, right now the ignition bar is setting up. And as I was talking with James, because we were talking like, all right, say you're not in the trade already. So if you're not in the trade already, how do you capture this thing? What is it? What's the makeup? And everything that goes in and around it. So the one thing that I'll talk about right here is there was a clear example of this on last Tuesday. Can everybody hear me correctly? If anybody's in the chat, just say, yep, audio is going through, because this was like off the cuff and I didn't really have like a whole lot of time for any kind of prep. So it's just kind of like, all right, let's fire the software up. Well, somebody does answer me in the chat. Okay, thank you. Okay. Ignition bar setup, day trade type 7. Clear example of this was on Tuesday of last week. So one, we're going to look in hindsight, and then what we're going to do is look at it right now in real time as it's developing. So a couple of things in real time that I'm looking for as this trade setup. So one, I want you to see how exactly the bar sets up in an example. And an example was Tuesday of last week at, this is 11 o'clock. And what I want to hone in on, let's see if we can zoom this in so you can see clearly of what this bar looks like. So whenever you're looking at an ignition bar 1, an ignition bar 1 is a trend day setup. So one, you have to acknowledge is today's environment, are we trending? Are we sideways? Or are we consolidating? These are like the very first questions that should come to your mind, because this then dictates where you go in a day trade setup. Right? Now, for me, I have 15 of them. Right? They're on the website. Everybody can go. This isn't a push to, sell product or whatever else, but this is more of education. And I'm trying to give you guys the sequence of, a little bit of what I believe is, as a professional trader, how you look at the market. And the one thing that you have to do is identify, okay, I'm trying to identify a setup. What in all of my arsenal of setups, there's trending setups, there's sideways trading range setups, and there's coiling setups, right? And so the first thing that you should do is you open up the chart, you're looking at the screen, right? Whatever time period that you're looking at. In this case, I'm looking at an hourly chart, right? And so in this chart, I'm either choosing trending, sideways, or consolidation. So today I believe it's a trending day. I really wanted it yesterday, right? Again, it's like, if this happens, then this should happen. If I'm looking for this as the trade setup, then as in real time the day progresses and it's giving me this look, then, right, you have to either mentally be able to be flexible in your mind and change in the setup, or you stop trading altogether because it didn't happen. If you can't mentally adjust in real time quickly, then I don't know, but in this game, if you're going to play this game, this game, your mind has to be flexible. You can't just own a bullish bias and just like that's what it is and that's the only way I can trade. Or you can't own and be bearish and just be pessimistic, or there's you know, you're looking for, you have to be flexible in your mind. But that's another, that we're getting into psychology. I don't want to get into that. I just really want to talk about day trade type 7. So one, I'm coming in and I'm saying today is a trending market, right? So I'm going to only look for trending day trade setups. Day trade 7 is a trending market setup. Now, what does a day trade setup look like in hindsight? So in hindsight, Tuesday marks it, and it's this, the bar itself, the ignition bar, is this 11 o'clock bar on Tuesday. It's this bar right here. So, you know, people say like, well, Jay, what is it? What does an ignition bar look like? And this is a pure, easy an example. Now, they're not all going to look the same, but they're going to look similar, right? And they look like that, where you coil and you consolidate. And again, this is an hourly chart. We'll look at this on a 5-minute chart. But you'll consolidate, and then it's an explosion. It's an out of balance move. An out of balance move with momentum. And so this bar forms. Now, as this is forming in real time, which we'll look at as right now, this bar is forming an ignition bar. So, right, we're at 10:43. It started at 10 o'clock, the bar itself, and then it'll go from 10 o'clock until 11 o'clock. And then what happens is the bar, right, will close and shift, and where you can confirm that the bar is, that you're on the right trade, is there's a previous bar, this bar right here. There's the ignition bar, and then there's the bar afterwards. Now, what makes the ignition bar unique and where you can pick it out of a chart is where the high of the previous bar and the low of the bar afterwards, there's what I call time and space in between where they do not touch. So this space is where they don't touch. Now, also, if you looked at that on a profile chart, and let me see if I can get that up. What day was that? Tuesday? 11:25. Okay. So, what you will also see, and let me change screens here. I want this bar, this chart. So what you will see here is in real time, where I say there's got to be time and space. Now, I say time and space, you were just looking at a candlestick chart. Now, what you will notice on a profile chart, sorry, I'm trying to get this where you guys can see it. What you will get on the profile chart is single prints. So where you'll see this time and space, it'll be like this. And this is called a single print, which most of you guys know, but if you don't, you can look that up on your own time. These are single prints in market profile. These are TPOs, right? TPOs. And so that ignition bar, when you back test this, right, there's looks and things that are on the chart that kind of, right, they, in real time, they plot, and then, right, you're looking for that confirmation in real time, right? Like, because how would you know if your trade is working or not working? How do you know if you should get out of the trade or not get out of the trade, right? These are the things that you're going to be monitoring for continuation, so that you know, like, all right, just don't take your trade off early, or hey, the trade's working out and I can get a little bit more push out of the trade. But the bar itself is this thing where it's a momentum trending bar. It pushes out, the next bar forms, and then you'll get these single TPOs. And that should give you confidence that, okay, things are moving and progressing forward, and, you know, just leave the trade on. Or if you want, add to it, right? However risk you are, you can, that's confidence, like, fuck it, I'm going to add to this thing. Add to this winner. You know what I mean? Get more bold. These are the things. Now, let's go back to the candlestick chart, because that's, again, most people don't have market profile software. So if you don't have that, right, I kind of like to talk about this on a candlestick, because anybody can pull a candlestick chart up. So again, now, this is, you'll look for time and space, and then there's usually, it's a 3-bar setup. And so the ignition bar starts the setup. This is bar 1. And then what happens is you'll have a continuation in the trend, right? This is a trending environment, and you'll have 2 and 3. There'll at least be a second bar and a third bar as follow through. And those don't have to, you know, and I will say this. Now, in this example, right, you have time and space between this bar, and then you have time and space between this bar. Now, you don't have to have time and space. These next 2 bars can be overlapping. But what they will be is, I mean, I know my chart, I changed my colors. I'm weird. I don't have green and red. So I got gray and gold. So gold is like a green bar. So there's the ignition bar, and then there's usually a 2-bar follow through push. And then you'll get kind of like the juicy pullback, right? And what you did right here. So then this is then, right, that bar that you'd want to like jump in and add on the trade for, again, some more follow through. Again, you're under the impression, and I want to make this clear so that you understand, there's a difference in trading when you're trading a sideways market. Because when you're trading a sideways market, like this rolls over and comes all the way back down into here, right? And then this would be the right breakout, pull back, hold the pullback, and then go. But when the market is bullishly or bearishly trending, like when it's trending and they don't give you, you know, there's, you know, all right, I'm not going to swear on this. I told my wife I won't swear, but they're not going to care about pullbacks. It's just, they're just buying it. It's initiative buyers or sellers, because it can be on the downside too, where they're just hitting the bid, right? Or hitting the offer, but they're hitting it and they're not giving you any chance to get in. It's literally like that, you know, trending market. And so there's not too many opportunities to give a pullback, right? So when you look at Tuesday of last week, you know, this was really the only good pullback, right? So you had this bar form, this kept on going up, this kept on going up, and then this bar gave you the little bit of a pullback, right? The one timing, you know, we were one time framing higher, and then this gave you where it didn't make the high, it made a low, that's the pullback, and then the next bar moved over, and then, right, we're back to moving up, and you never got a good, juicy pullback. I mean, there was 2 pullbacks in this move. Like, when you look at this on a chart, where would, I mean, a 2-year-old, I could have asked a 2-year-old, where would you want to buy a pullback? You'd want to buy it on this candle, in hindsight, and this candle. Like, that's where the good, that would be, that'd be the identifying place that you're like, man, if I was right there, that would have been the place to buy. Any other place would, you know, not necessarily be a good place to buy. Now, I'm looking at this in hindsight. Anybody, any trader, and especially it's horrible, it's horrific on YouTube, where, you know, they give you an example, and and they show you some shit on the chart. Dang it, I swore. They showed you something on the chart, and it's in hindsight. Well, any person, without getting frustrated, can show you things on the chart in hindsight. So, but I wanted to show you an example, but now let's go in real time. So let's do this in real time, because that's how you're trading, right? We're all trading in real time. So when we're looking at this, in the mornings, what have we been talking about? We've been talking about this move higher from last week into a spike, and then, right, whenever you got a spike in channel, or you're going to have a spike in range, or you're going to have a flag pattern where it pulls back and there's a flag pattern. Now, when we're looking at this, easily identification where we're making a spike in channel higher. Now, we're looking for that ignition bar push, or I have been, and I haven't really necessarily got it. We didn't get it yesterday, right? Yesterday, it opened up. It had a look like it was going to push out and break out and give this breakout, and then what did it do? It fall back in, and then we're back into the range. So, it didn't go. But we're still in this bullish range. So anytime that when this formed, it didn't say, hey, sell the rips. There's nothing on this chart yet. Now we can, there's no confirming bearish setup. So the setups that I'm looking for until a bearish setup presents itself is I should follow the trend, right? And so this pattern is a bullish setup, and then what we're looking for is that push out of this range. Now, what should happen, and if I'm wrong, I got to get out of this trade because I am long, is what do we got? 7 more minutes. It's on my clock. It's 10:53. I think there's like a 20-second lag on YouTube. So we get this push. Again, this should make it where there's the high of the hour before, right? We got 7 minutes. There's this high, and this should close, move over, right? And there should be time and space in between this ignition bar and the next bar, right? Now there's 7 minutes, so we got 7 minutes for this bar to get kind of up, close, move over, maybe it gives a little bit of a poke below, right? But really it'd be nice to like shift over and then go again and make a higher bar. And again, the space between these two, right? Those should be single prints. We should go back over to the market profile chart. Let's do this. We'll scoot this in. Damn. Oh, Jesus Christ. Let's try that again. I don't know if it's because I got the software up and then everything's moving. Right, it's kind of taking a lag. The streaming software takes a really beat. I mean, I got all these screens and I got all the software already running for the trading software, but it definitely takes a beating when I got the streaming software and it's running in real time, so it gets a little glitchy. So then again, we're coming in. This is already looks ugly a little bit. So, right, because we don't have those single prints, right? We're going to open up. So this is already failing to look like an ignition bar, right? Because what did I tell you what the look should be on this chart? You should have the TPO should be single prints. And again, now we're even coming in. Because, right, if this was the close right now, and the bar closes going back to, right, so this already has the failure of the ignition bar right there. Yeah, because let me show you. So it doesn't have, you should have that single print look, right? We should be up in here, and this should have single prints, and then the chart moves over. So again, so this is in real time failure of the day trade setup 7. So, right now, this is just gonna get sucked back in. Let's go back to all right. So this is a good example of a failure of the day trade type 7. Let's go back to the dashboard. Because right, well, I'll stay with you guys as this closes over into 11 o'clock. But right, we're going to close here. And the high of the previous candle, right, this will close. Say it closed right now and it moved over, right? You're overlapping. So this bar here, this as this forms, it's overlapping, right? So the open of the 11 o'clock bar will be overlapping of the 9 o'clock bar. So right there, right? That just tells you, I mean, this gives you really good. So it's what, 11 o'clock now? At 11 o'clock, just looking at these two charts, the two charts that I showed you, I didn't even show you all the other charts. We haven't even went through that. But right now, this is showing you that day trade type 7 failed. Right? We're going to open up. It's going to shift. This candle, this new candle is overlapping this I don't want to say the previous candle because it's going to obviously overlap this candle. But it's going to overlap also the candle prior or before that. And so there's no, what I always describe as clear space and time in between the two, the low and the high with the candle squeezed in between. That's not even going to happen. So then that right there should tell you, all right, that's identification in real time that, all right, we're not trending. Right? This isn't really trending. Now, another thing, since we're here and I'm trading this, I'm looking at, not that, charts. I'm looking at this. Right? So on the dashboard, a couple things that I'm looking at. Your ADSPD, this should be on a trending day. This should be sitting at around, or it should be moving up into and holding in and around 3. And really what I like to see is 400. But I'd really like to see, I won't even say 3. On a real trending day, this will be like at around that 400-ish or up. And that's another confirmation of a trending day. Now, we were moving towards that way, right? As I came live on the stream and we were looking, and I was talking to James at 10 o'clock, 9:30, 10 o'clock. We were looking, and this was moving towards, right? You had that momentum pushing, and now in real time, right? Like the last 10 minutes, we've now got a pull back into range, right? This Vold, when we look at this, what you're going to want to see is on a trending day, we're going to hit 300 million, right? Like we're only down here at 6 mil. 1,62 mil. We should be up here. So when you back this out, I don't know if I can get an hourly chart on here, right? So, right, I kind of got indicator here of where a trending market should be, right? Like again, when you get these trending markets, you'll get the Vold over or under these markers. And again, it's not one indicator that's going to be like, oh, that's the magic and that's it. It's more of a multiple indicators that are all telling you the same thing. Everything's in sync. So, if this isn't in sync with the ADSPD, with the tick and VIX and the market profile, all these things, right? Then that's, you can have these outliers, but what you're really looking for in real time, and especially, and I'm in this video, I'm describing day trade type 7. So day trade type 7 is a trending setup. It's a trending market setup. And so things that I always look for is in real time this ADSPD moving up towards 300 to 400, and I'd really like to say 400. Is it moving up there, or is it sticking up there at 400? You know, if we break this out, you know, is it up into this and sticking up here? Right now, you had that move where we were marching towards it this morning, so it really looked good. And now, as right in real time, I'm trading with you. Right, we're pulling back. So it's these things that you should have awareness of. What should happen? I always talk about, if this happens, then this should happen. If day trade setup 7 was to follow through and we were to get it, then ADSPD should be at 400. Volt should be volume. The ratios, the breadth, cumulatively should be marching towards the high watermark, the trending watermark on the indicator. Your tick should be trending. This should, you know, be, and it was marching up towards, and this should, you know, by the end of the day, this cumulative tick should be at around 10,000. Right now it's at 1,440, right? But it should march up, right? You should have a cumulative build, right? It should look, you know, give this kind of look. Although this was, I shouldn't say that. This is not, that's not correct, because this was Friday and this was a shortened day. So it should give like this Wednesday look where it builds and then keeps on building and keeps on building. And you should have this. So this, even though Wednesday wasn't a trading day, there's other things that you add to it, but it should have this look to it with, you know, like when you look at Wednesday, so this cumulative build on Wednesday on the tick looked good for a trending day. But then what told you it wasn't a trending day? The ADSPD, right? This was hovering around 200. On a trending day, you'll look and this will be up here at the 400. You know, so it's those things. It's like, what things show me multiple things, not just one, but multiple things, and to give you conviction and confidence that you're in the right trade, not just one indicator. So again, this was looking good. You know, we were building here today. You had the setup on the hourly chart. I talked about what it should look like. We went through last Tuesday, and now as we were looking, right, it's now 11 o'clock. Let's go back to that hourly chart. And then, right, like, this just shows you that it's invalid. So day trade setup is invalid. You shouldn't be trading that setup. It didn't work out. And, you know, now it's like, you know, where are you in the trade? Do you have, you know, this doesn't say, hey, sell and flip short, right? It just says that you're not going to trend. Today's not going to be a trending day. You know what I mean? So today's not going to be a trending day. And that's what it tells you. So then, all right, as you're adjusting in real time, like, right, if you're the football coach and you got players on the team, right, and in real time, you have to make an audible or an adjustment. And you either one, right, like how good are you in the trade, right? Like, I am long at 68, 60, 75. So I'm long at 68, 60, 75. So now looking at the chart, you know, I am 68, 87 and a half. You know, so I got a little wiggle room. It doesn't tell me, hey, to just jump out of my trade, but it does tell me, like, don't expect a trending day, and don't expect, you know, we're going to go test, you know, let's go back to a volume profile. You know, don't have this illusion in your head and, hey, today's Friday, it's the end of the week, and we're going to tap, 69.51. Now, if day trade setup was to set up, then yeah, this is reachable, because what's the 10-day average? What's the ATR? ATR is 68.60. Did I do that right? Yeah, 68.60. So with 60 points of range, right? We're at 68.89, and the 10-day average range is 68 points. I mean, that's easily achievable to take out 69.51 if, right? If the market participants were if this was gonna be a trending day type, but it's not. And so now when we look at the charts, what do we see? More chop. I mean, literally, when you look at this, it's like more of the same. Right? So we have the push up into what? Right? Spike and channel. Like we talk about, spike and channel. So we're still making higher highs and higher lows at the same token, right? But I would say this. Whenever you get these rotations in a spike and channel, this doesn't go on forever, right? This doesn't just keep on going and this goes like this. That's not how it works. So we are getting long in the tooth, right? There's been at least 3 rotations. I always think of things in threes. So, right, the spike and channel happened, and you had 1 rotation, 2 rotation, 3 rotation, 4 rotation, 5 rotation. This would be like another rotation. We are getting long in the tooth on rotations. So, you can't keep on buying the dips forever, and it does feel, or it has the look, I don't want to say the feel, it has the look like the buyers just can't push it and get that day trade type 7, and you can't get that trending market. So if the buyers can't, this won't, and for a fact that this won't, trend in this channel forever. At some point, right, there's a break above, an explosion, ignition bar above, or this just dies out of exhaustion and this rolls over. Now, again, it hasn't rolled over yet, and we're still not, somebody tell me where we're made a lower low. Here's a low, higher low, equal lows, higher low, higher low. So on an hourly chart, not to say that we're getting long in the tooth, and not to say, there could be a good argument to short this market, but at the same token, the price action hasn't proven to you that it's okay to short this thing. You're literally making, higher lows. It's a grinder, but you're making higher lows. And what's the definition of a trend? You know what I mean? Higher highs and higher lows. And so there's nothing yet to say that we need to flip short. And it still says to go be a long participant. But, don't hold that narrative and don't hold that in your head. This is a live playing game. So let's go to the trigger chart real quick. And if you guys got questions, throw them in the chat. Because, since I'm here live with you guys, and there's, if there's any questions, we can go through that. Let me do something where, all right, I just got to the desk earlier and I was talking to James, so I haven't even marked up my chart as far as this morning's trade. Yesterday, that trade that I'm in was long from yesterday, and I never got out long from yesterday. So let's do this. Let's do this in real time. 68.68. Oh. 68.68. 68. 5.75. 68.54 and a quarter. And then the pivot point is 68.59.50. Sorry. I was talking to James earlier today, and then, you know, we popped up the screens, and then I didn't get a chance. So, we're out of balance from yesterday. We pulled up, and now we're pulling back. On a 2-minute chart, I already know this because on a 5-minute chart, we're already underneath the 20-period moving average. That 20 period is already bending over, right? So we are holding this pullback, right? There was a breakout pullback. And so again, this kind of grinding action. We are 4 TPOs deep on the market profile. So as this is playing out, as I'm watching my own position in real time, right? Like I'm long down in here at 68.60 from yesterday. Stayed in the position long. And then, right, we're in this price action. So what don't I want to see? I really don't want to see price like kind of get back into value. That would really suck. That would tell me, right, like the buyers are really kind of that the first sequence of buyers being, you know, leaving, and this could be where that was the high, marked the high today, and then we go into next week, and then, right, we kind of roll over and really pull back. And when I say really pull back, like it has the potential, hasn't shown itself, hasn't proven itself, but right, like this range is been really a grinder going higher. And so we have to attract new buyers, right? From last week's push so strong, and then you have this grinding action. You know, it hasn't been very, you know, if you were a seller and you were trying to sell this, any of these spots, like you've been, right? I always think of like, what have you been? You've kind of been unhappy, right? Because you haven't gotten follow through. It's like gave you a liquidation break and then they bring it right back up and then take out that high. Right? So you haven't been proven right at all. There's not a seller that's been proven right. Now I can get people chatting or leaving a comment like, well, I made money selling and I sold the top. All right, well, you know, we're not here to, well, I'm not here to scalp and, you know, just take these, you know, trades. You know, I get people all the time like, oh, I made money on this move down. I shorted that and I made money, and I shorted that and I made money. All right, you made a positive trade and you're in the green, but as my mentor once said, like, it's still, you know, if I was to bring a 2-year-old and I said, hey, 2-year-old, what would have been the better trade? So not like a green trade or a profitable trade, but what's the better trade? Or what's the best trade that you could have traded? The best trade that you could have traded on Wednesday is this low and then sold this high. That's the best trade. Now, could you have made money selling this high and buying this low? Yup. But what's the better trade? Right? What's the better trades when I look at this day? What's the best trade that you could have traded to make the maximum amount of profit? Buying this low, selling this high. Not selling this high and buying this low. Same thing here. The best trade would have been here. Actually, I should take that back. Actually, the best trade on Sunday, well, this was kind of Monday's best trade, but let's be honest, I don't want to be a hypocrite. The best trade would have been selling that Sunday opening when it opened up on Sunday and selling it and buying 68.02, right? Like that's the best trade right here. This is the second best trade, right? This would have been the better trade, I guess. But I guess it depends on how you're counting. Because, I mean, yesterday's short in the day trade itself, selling high and buying the low would have been the better trade. So I guess it's in perspective. I guess when I look at this, I'm looking at this and we're marching to higher highs and higher lows. So in the trend count, I am looking at these still confirming. That's how I'm looking at it. So I'm usually a person where as I'm day trading, I'm trying to stay on the side of the trend, because I'm looking for an extension higher through an inflection point, right? Like this is an inflection point. This is an inflection point that we all can see on the chart. And I'm looking for follow through the last inflection point. So when I'm looking at the markets that way in a repetitive manner, then what I'm looking for is where do I want to get long or short? And in this example, or in this in real time as we're trading this, that's how I'm looking. Now where I turn bearish and I'll start selling the rips is if this price undercuts this low, right, and then holds a pullback and then makes a lower low, because that's when it changes, right? Because now the sequence is I've made a high, I've made a low, I've made a lower high and a lower low. I'm looking for that continuation, you know what I mean, in a trend, and that's when I flip. So in real time, now that I kind of went through that exercise with you guys, then the move that I'm looking for, right, is low, high, low, high. This would be in the trend count, right? I want to make sure this is like where I definitely I'm wrong. And then, right, I have my position here, so it's above the inflection low, right? So I have to like really monitor this trade, because this has to hold and cannot make a lower low. And I really don't want to see it underneath my position, and I'm looking for this to high. Now again, as we already shown, today's not a trend day. So we know for a fact today is not a trend day. It's not a trending market when I say trending market, in a momentum trend, like a momentum trend. I mean, if you've been trading, all of you guys should know like what a momentum trending day is. It's like it just rips in one direction. That's it. So we know that's not it. That's definitely out of the picture. Now, we're still in a normal variation up. Like this would be defined in trading terms as a normal variation up day, right? Where you make the initial IB, right? You push out of the high end of the IB, you pull back into the IB, and then you, right, make it move higher. And so this would be a normal variation up. That's what it's defined as, if we're going to talk technical jargon. So this still has the look of a normal variation up. Let me go back to the market internals, just because I want to make sure that, right, things are still holding up in a positive manner. So I don't want to get too ahead of myself talking, and then I'm not looking at everything. So again, this still says positive, right? This is positive. This has just turned negative on the cumulative tick, right? We were positive and now we're kind of negative. So this is a negative, right? So we have one positive, one negative, and where are we on the VIX? Right, you do have this push up, and I'd give this a negative. Now let's look at where we are on the core list. Right, negative, 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 positive, 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 negative, negative, positive. So we have 1, 2, 3, 4, 5. 5 companies. This is the top weighted. So this is like right now I got the 11. So I got the top 11 top weighted in the S&P 500. And so you do have this like push and pull action where you got 6 or so negative. 1, 2, 3, 4, 5, 6. 6 companies from the open are negative. From the open, this is this percent change. This O means what is the percent change from the open, not from yesterday's close, but from this morning's open. So from this morning's open, you have 6 companies negative, and you have 1, 2, 3, 4, 5 companies positive of the top weight. And then when we look at sector, your sectors, you have 1, 2, 3, 4, 5, 6, 7, 8. 8 spider sectors, ETFs, positive, and you have 1, 2, 3 that are negative, right? So you, as you're in real time and you're trading this game, there's things that, right? Like, all right, I'm looking at my dashboard, I'm looking at what's happening on price action. I have a little bit of positive values going on. I got some negative values going on. This is kind of, I would consider this to be a little negative in real time. And then I have some positive and negative action. And so you just have, think of it like a tug of war. You know, when you were younger in grade school, you know, you got a bunch of kids pulling on the rope, a bunch of kids pulling this way, and a bunch of kids pulling this way. And what is this showing you in real time is it's like almost equally matched with a slight tilt to the positive. So if you're long, right, that's feedback telling you in real time, like, you know, it's a choppy market, but if you're long in the position, you're still okay. And that's how I want to I'm trying to articulate this to you guys in real time of what you would be looking at, what I look at in real time to give me confidence. Like, should I just scratch this trade? Like, should I just scratch it? Right? If I had a risk manager over my shoulder and that he would say, like, Jay, you know, in real time, how are you assessing this trade? Should I have just gotten out right now? Right? We go back to the trigger chart. You know, should I just have gotten out at 68.88, 68.86, and now we're trading at 68.82? Like, in real time, like, should I be getting out of the trade? I'm positive, and should I get out? And, you know, when we just looked at the dashboard and looked at, as we're looking at everything in real time, you know, it doesn't say, you know, I don't like it that it pulled back, that we got this bar, but it doesn't say to jump out of the trade. And in fact, there's a little bit of slight bias where I should probably add to the position, right? Because in real time, I'm looking at this push up, and then we get a pullback, and if I'm looking for a normal variation where we've made the IB, and I'm looking for a normal variation up day, then I'm expecting by the end of the day, we should take out 69.05. Probably in either, you know, really probably in M period. M is in Mike, right? Like, M is in Mike, last period of the day, that last 30 bar, we should at least be taking out 69.05. So this should have been like really an add to the position for another move taking out this high. I mean, I'm the problem with trading and teaching or whatever, or me giving you this lesson is, right, I'm not honed in and actually trading. I'm trying to teach you guys something and give you a live example of a thought process, you know, in real time, thinking through, right? And not being jittery, not being nervous, your heart palpitating, right? None of that stuff. Not sweating, right? You know, do I like it that this pulled back? No. But does it tell me to get out of the trade? No. Nothing tells me to get out. It doesn't tell me I'm wrong to be long. And it still says, like, we're making higher highs and higher lows, So, you know, you kind of take the information as it is. Again, now let's go to the market profile chart, because again, I'm looking at all these charts. Right? What do you notice on, like if I just give you a sample size of these charts, and maybe people know this or maybe they don't. I don't know who's necessarily watching on these streams or who isn't, you know. So sometimes I go over a lot and I beat the horse to death. But I'm always thinking, if you're a new guy and you don't know, and this is trading, and you're new to this, you know, I'm just trying to reiterate things that you should be looking for. When you look at this profile, and you look at this profile, and you look at this profile, and you look at this profile, what is the pattern that you see? You see that this is, right? This is 1, 2, 3, 4, 5, 6, 7, 8. 8 TPOs wide. Right? 8 TPOs wide. Everybody can see that? What do you see on this? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 TPOs wide. What do you see on this one? Where's the widest part? 1, 2, 3, 4, 5, 6. 6 wide. What do you see on this one? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 TPOs. What do you see on this one? 1, 2, 3, 4. So, as being a 2-year-old and looking at the chart, would you not say that we're going to spend some time and price as this builds out, and right, you get this, they overlap, and you get, right, this builds out a little higher, this might build out a little lower, and then this builds out, and then you get another one, and then you get another one, and then you get another one, right? And so then what is this? This is chop. And that's usually how days end up, right? They end up in this chop. Now, let's go to a trending day. Let's find a trending day on here, because I want to show you what the difference between the two are. Right? Here's that one Thursday. That's a trend day. Right? And so what does that look like? Right? So when you look at a trend day, right, you get a lot of single prints. Now this builds out, and this all builds out at the end of the day. So it's that thing where you missed the trend, you missed a good move, and then, right, it ends up building out. 1, 2, 3, 4, 5, 6, 7 TPOs wide at the end of the day. Now you can look at a candlestick chart and see how that plays out. You know, you probably, without looking exactly, I could just look at this chart and tell you what happened. This is 4 TPOs wide at the top. So you probably had some price action here at the top, right? That kind of looked like this. And then all of a sudden she broke through. You had a pause where there's like a little bit of a pause. And then you broke through, right? And then you broke. And then, you know, it probably came back up. And then you sat the rest of the day doing this. And that's the day's trade. So when you're looking at these TPOs, there's going to be a time in the day where you have chop, 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 chop. The object is where does that chop formulate? So now let's go back to today's TPO. Right? Like that's the look right now. You know? So looking at the other TPO charts, you know, this just doesn't look, I mean, this looks like you need to, right, build this out more. And this just looks like, you know, as we move into different periods, they'll probably fill this in. This will get filled in. Then price will move over. And then you'll have a, you know, price here. Right? And this will kind of build out throughout the day. And it'll be chopped. Now, I guess what you'd be looking for is in real time, right? Does this form out into something more? Because this could always, right? Like we looked at that one Thursday, that was 4 TPOs wide. You had 1, 2, 3, 4, and then they let it loose, right? They really let that loose. So in real time, that's what we're going to be looking. That's what I'd watch for. And again, I just, you know, you're looking at all this stuff all at the same time. So we're watching these TPOs. I'm watching the single print. It's 11:32. We just moved over into E period. Right? The Vold still is positive. Let's go back to that chart. How is this developing? Right? We are getting a little bit of a push downward. This is slight, you know, moving down. You're monitoring for continuation. Because if this really starts getting worse, right, then, yeah, we got to get out of that long trade. This is turning negative. This has to improve. What you're going to want to monitor in real time as this game is playing, you know, you really don't want to see this getting worse. If this starts really getting worse and we start hitting like a negative 1,000 on the tick, you know, somebody who's bearish is going to be like, yup, selling action is really kind of selling action is coming into the market. How is this getting? Is this getting worse or better? What was it before? Like this here was what, 6 negative and 5 positive, and now what are we now? We're still 1, 2, 3, 4, 5, 6. So we're still 6 negative and 5 positive. So that hasn't changed. This needs to improve. You want to see this improve. I want to see this improve. I want to see this improve. I want to see this, right? I want to see this breath ratio, right, as it moves over to the next 5-minute bar, you know, start marching higher. This is kind of went sideways, so we've went down to then a sideways action. This is went down to, again, sideways. This is continually moving down. This needs to improve. Then going back again to the profile chart. Right, I don't want to see this TPO really getting any kind of momentum to the downside, where this ends up making like a single print. I want to see this like kind of roll back up. Right? See this roll back up. Fill this in, and then roll over to this next TPO line, and then build this out. It is Friday. It's the end of the day. It is coming up on noon, right? It's very hard to get initiative selling or buying kind of, you know, as you get later in the day. Volume starts, right? Your volume starts dying off. Market participants, any trades, they kind of, right, they either took them off or, right, it's the last day of the week. It is Friday. So, you know, think of if you were the manager of Yale Endowment. So you're managing Yale Endowment's portfolio. Are you on a Friday at noon going to put on a trade? No, you probably already put it on earlier today, right? You came into work, you traded it. You're talking, you know, you're at the investment bank, and you're probably it's getting on to noon. You're getting ready for lunch, and you're probably talking to the desk next to you, the guy next to you, and like, what football games are on this weekend? You're not actively initiating a big trade. Now you as day trading, you might still be in it. I'm in it to win it. But real money is not initiating trades. Let me say it this way. The probability of an investment banker managing a Yale endowment portfolio or a large portfolio, a corporate portfolio with billions of dollars in it, is more than likely high probability not initiating trades on a Friday at noon. Right? So it's going to be very hard to really kind of get going. And if there was a liquidation break, we've seen many of those, they happen at the top. You know what I mean? Like what happens is, let's go back to the trigger chart. Right? Where do you see these liquidation breaks when you're looking at the chart? Right there at the highs. You have this high, and then she sells off really quick, violently. You're kind of right. You're at the high of this. You're at the high, and then boom, she sells off violently. You're at the high, and then she sells off violently. You're at the high, right? And I guess you could make an argument that there is a sell-off violently. But the tempo, I feel like, hasn't been, the tempo hasn't really been violent. It's been this drag lower, like a grinder. You know what I mean? You haven't had like a bar where this opens up and then boom, like the 5-minute candle takes out like 30 points of range. Right? Or 20 points of range. This has just been like a move lower. Just kind of like the slow grinder lower. Not anybody like pushing the button hard. So, more than likely, this is going to get sucked up. And again, where am I wrong? Where are you wrong? Where would I be wrong in that? In analyzing that trade is, right, we get back into value. We get back into value. You kind of have to think about it's like day trade setup 6. Day trade setup 6 comes into play. So then day trade setup 6. In that case, right, this long trade that I'm at 60s is invalidated, and I got to get out of the trade for a small profit. But you get inside of this 68, we end up finding ourselves getting sucked back into value. And if that's the case, like, then that's it. I'll leave on this chart right here. This is right. This is where this chart is my chart where I'm looking at the trend. And I kind of follow the trend based on this chart. And I'll leave it at that. Where is the low volume nodes and high volume nodes? And anybody got any questions? I don't see anybody have any questions, so. Right? We know we had an LVN here at that 6810. That's still a prominent LVN on the chart. So carry that forward. And then again, the high volume node I'd say is at that 6830. Right? Like I'd really say like this is the high volume node is right in here. You got an LVN at 68.70. It's not clean. It's not the cleanest LVN. That coincides with static value area high. Right? Static value area high is 68.68. So that 68.68 static value area high coincides with the 68.70. So if this market is to roll over, right, then price will roll underneath 68.70 and it'll roll underneath and back in underneath 68.68, and then right, the target would be 68.54 and a quarter would be your first target. So targeting 68.54 around here, that would be the first target. And then there would be an expectation where then a move down to 68.30. But one has to first follow the next. First, we have to get underneath 68.70. Then we have to get underneath 68.54 and a quarter. Then we have to get to 68.30. Right? Price has to tell us that. Now, if you're right in the trade and I'm right and I'm long, then if I'm right, then 68.70 holds, this LVN holds, and then we move up to 68.85, right? And why do I say 68.85? Because looking at this chart, right? What is it that we're if we're long, like if you're right and if you're long, right? 68.70 becomes the hold, and then we roll back up to 68.85, right? Because what are we looking for? This to fill in. By the end of the day, right? Like we have TPOs that fill in, and it's like 1, 2, 3, 4, 5, 6, 7, 8 TPOs wide, and this overlaps. And at the end of the day, you'll look at this and be like, "Yup, 8 TPOs wide." And so price has to roll over to form that pattern. And so in real time, that's how you're managing your trade. You're managing that trade. And again, you have to honor your stops. You know, this game of trading, and I have met, hung out with great traders, hung out with shitty traders, bad traders. Sorry, excuse my language. And I can tell you the difference between a good trader and a bad trader is literally like honoring the stop. You get into a trade because of some idea that popped in your head. And what you do is you, instead of honoring that setup, you change it up on a whim, or you ignore it, where you're like, I'm just right. I know I'm right. And literally the difference between good traders and bad traders is, you know, you could scalp and you could take bad trades, or what I would consider not a good trade. I would say, hey, like that was a good trade. You made some money, but man, the better trade would have been this. So I'm always constantly on myself. I'm on other traders, where if you're in a trade and I'll get people like, well, Jay, that was a good trade. Like any green trade is a good trade. And I'm like, well, that's bullshit. That's not true. I don't believe that. I mean, maybe somebody can say that, but I don't believe that. I don't believe just because you made a positive trade and you got positive. Because I've seen it where, and I've back tested my own thing, where I had a good trade and it was a good trade. It just didn't work out and I had to take a stop. And I stopped out and it was a loss. So the setup was there and it just didn't happen. It was a good trade. If I would have did that trade 100 fucking times, in 100 times, 67 times that would have made money. And then, right, 33 times it wouldn't have. That's a good trade. But just because it lost money and it got stopped out doesn't mean that was a good trade, or it doesn't say that wasn't a good trade. It was a good trade. So, this game that you play psychologically in your head on a psychological level is just whatever you want to tell yourself. And I might be, a little bit rough around the edges, and I might be raw, but I'm just telling you what it is. Like, this game does not envy the weak. It envies the strong. This game is, you eat what you kill. You have to be ruthless. And so, whatever that whole rant was about, but you want to really take good setups, and you want to honor your stop. And if you're wrong from why you initially got into the trade, then just honor it. Take the stop. And then, you can always clear your mind and then look for the next setup. But if you get into a trade because of a reason, and then that reason doesn't play out, then, get out of that trade, especially if it goes against you. Now, again, this game, if you got in a good execution level, you do have a way to manage that trade and manage it, but again, I would just say, if you got into a reason of a trade and then it doesn't work out, the object is just take it out and then move on to the next trade. And definitely honor that stop. I say that, I harp on that enough, because I see so many people that I've worked with and traded with, and the difference between that good trader or a trader that sustains this game or this profession, that makes a daily living wage out of it, that difference is really just the ego in a human being of being proved that you were wrong, and then not just honoring it and just adding to a loser. And that psychological game that you'll play in your head will transcend over time. And maybe you don't make that hard $50,000 loss or that $20,000 loss now, but you'll be in a position, and this market will hit you hard, where it just runs in one direction. You'll be in a company stock, a single stock, or you'll be in an index, and all of a sudden, that thing runs for 7 months straight, never pulling back, and you're just hemorrhaging money, all because that one time. Most of the time the market gives back. It it goes forward and then pulls back, goes forward and pulls back. And, you can do this game where you dollar cost average, and then it comes back and, you scratch trade. But what I'm telling you is, if you play this game long enough, I've been playing this game since 2011, right? And I'm telling you that you will be in a market environment that it does not pull back. And if 1,000 times you traded and it's oh, well, Jay, it always pulls back, or I've dollar cost averaged, I've 2 contracts and then went to 4 contracts and then went to 10 contracts and then went to 20 contracts in the trade, and then it eventually pulled back and I got out. And it's done it 1,000 times, Jason. But that one time that it doesn't, and then you're 100 contracts deep, or you're 5,000 shares in a company stock, and that thing just runs without you and never pulls back, you will wreck that portfolio. That's how portfolios get wrecked. That's how traders that I've met over all these years that are not with me today, or are out of the game completely, got a job, whatever, can't make a living wage out of it, blow up their account. And it's because it's that one trade. It's literally a trade. And this is even in hedge funds. You watch how hedge funds blow up. It's not a combination of a whole bunch of small losses. It's one big trade that they fucked up and they didn't get out. And then that one trade cost them the whole portfolio. That's how it happens. That's the reality. And how does that happen psychologically? Is because at some point you said, well, this works and no big deal. I'm underwater and it'll come back. And then that one time it doesn't. And I can tell you stories of all kinds of traders where it's that one trade. That's it. And they don't come back from it. So I can't tell it enough. And I'll probably beat that horse to death like 50 million times in my lifetime talking to you guys, if I'm talking to you guys on YouTube. But that's the one thing I can promise you, that if you have a trade setup or you have an idea and you're short and you're long, and if you're wrong, just get out of the trade. And you do it enough times, then that's the pattern that you learn. You learn like, hey, listen, I was wrong. You know how many times I've been wrong in my life? Lots of times. And you live through it and you go through it. And the object is you just hopefully you're more right than you're more wrong. And that's the game. That's just the game of life. Whether you're playing the stock market or you're just a father at home. You know what I mean? Hopefully you're making decisions for your family where you make more right decisions than wrong decisions. Because I guarantee you, there's not a goddamn human being on this earth that makes all right decisions all the time. It's impossible. So I'll leave that with that. Leave this video with that at the end. And hopefully we learned what an ignition bar day trade setup 7 doesn't look like. It does not look like what showed up on the chart. Hopefully I showed you what an ignition bar setup that happened last Tuesday. That's still active and in play. We have not, price hasn't retraced back all the way to that price. And, that was from last Tuesday. And then we're just going to continually watching this. I apologize for you guys for not being here in the morning at the regular scheduled time at 8:30. That's my bad. My son is in town, and we had just, father-son shooting the shit, and just time got away with us last night, and I was talking to him till 3 o'clock in the morning. So it was just hard for me to get up. So that's the excuse. I mean, that's just straight talk. So that's why I didn't do the morning analysis this morning. So that was my bad. I apologize. And hopefully me coming on, going live, going through this, you guys learned something. There's a lot of nuggets that should be taken away. And hopefully it makes you a better trader. And look at price is still, right? Like I said, like that filled in that gap. Will roll over. This will roll over. Make a TPO. And again, we're just kind of more of that chop. I would say, even as a trader, this is, this week has been good. It hasn't been great. Every trade has been positive. I haven't had necessarily a negative trade this week, but God, what a choppy week. Good. Awesome, Earl. This has just been a choppy week. You just, every time it has a good setup and then just kind of falls back in. It's just been choppy. But hopefully you guys have been honing in on, the levels. So, right, you're honing in on getting really good trade location. I'll before I leave, I'll leave you with this. And some of you guys have known this. Could have swore I've talking to Earl about this, and Lisa and James, and I don't know whoever else is on here. But when I was early in trading, and this was from a mentor, James, his name was James. So one of my mentors, James, and early on, this was like in 2013. So again, like I said, I've been trading since 11, and I ran into James in 2013. And James gave me a early test early on in my trading career, where he was like, I want you to take one trade a day. And he wanted me to, and I tell the story, and I'm being honest with you guys, he wanted me to sacrifice my life and take and when I traded, he wanted me to take only one trade a day. So that's all I had. I could only trade one single trade. And I couldn't take a second trade. And I tell this story because I really believe it really honed in my skill. You know, these things that you get from mentors, or, you know, you'll watch videos, or you'll pay for an education course. And, you know, not all of it is nuggets, but there's always a couple good nuggets in it. And one thing that James told me well, he didn't tell me, but he gave me that challenge. And he says, I want you for 1 year, I want you to only take one trade a day. That's all you get. And can you be disciplined? Can you be disciplined to only take one trade a day? And then if you take that trade, I want you to do it for 12 months. Now, I didn't do it for 12 months. So I did do the one trade a day. I was disciplined where I did that. And I really honed in that skill where I was like, okay, I only get one trade a day. So where do I want to take that trade? You know, where do I want to sniper in that shot? And then the only thing that I didn't do is I didn't do it for 12 months. So I did it for it was almost 7 months. It wasn't 7 months, it was like 6 months and, you know, a few days after 6 months. But I did not complete 7 months of it. And the lesson that I learned in that was what that exercise taught me, which again was a grueling 6 months, was to really hone in where that entry and exit is on a chart. And I tell that story so much to anybody watching this. So again, like, this is a free video, and you know, this is in, you know, me discussing to you, this is just trials and tribulation of a trader, and right, what I consider to play this game at a level to make a living wage out of it is, you know, these exercises or these nuggets that you do. And so, you know, I haven't met anybody yet to take that, to do what I did. Maybe someday somebody will do it, but I'm the only trader that I know, and I'm the only one that James told me that, and I'm the only one that I know to this day where James could say Jason was the only guy that took that challenge. Now, he probably would be like, well, Jay never really took the challenge completely because he didn't do 12 months. So I could see James being a hard ass, you know, because he was quite the a-hole. So I could see James saying that to me. He's like, well, you didn't really, you know, do it. But, you know, in my head, I'm like, hey, I did it enough where I got sharp. I honed in my skills sharp enough where I didn't feel I needed to do another 6 months of it. But nevertheless, maybe you do it for 2 months. Maybe you do it for 1 month. Maybe you do it for a week. I don't know. But I do attribute a lot of my skill set in my craft of getting great trade location with doing that. So if you're a new trader or an existing trader that's been trading for a while or whatever, and you haven't yet comfortably figured that out or anything, like, I would just, you know, that exercise and that lesson, doing it enough will get you to the point of honing in those sniper shots. You know, where is the best high a day? Where is the best low a day? And get you to a point of being patient and patiently waiting for that good trade. And you know, that's hopefully the lesson. And what that does in a real life exercise is, you know, it helps you journal. You know, the day ends and it's like, oh, where should I have traded? Where was the great spot? What was it? And you were sitting there watching the screens from, you know, 8 o'clock in the morning until 6 o'clock in the afternoon. And, you know, where you're watching the screens. I mean, obviously the market closes at 4:30, but, you know, there's 4:30 and then you do your homework and you do your journaling. So, you know, that exercise is daunting, and, you know, you don't have to do it, but I can't tell you enough and stress enough how that exercise alone helped my trading. It really honed in, you know, to be patient, sit on hands when I need to sit on hands, you know, take action when I need to take action, and be comfortable and not nervous in a trade because you've seen it and really just honed in those the patterns and how the flow of candlesticks flow in real time. So I don't know. Everybody, there's 1,000 ways to skin a cat. My way might not be your way. Maybe it's your way. I see a lot of people that half-ass this game. So as I always give advice to my kids, you half-ass your life, or you half-ass an exercise in life, or anything you do in life, and you half-ass it, you're going to get half-ass results. So, the future will tell. The future always tells everything. If you make good decisions, you'll get rewarded. If you make bad decisions, the results in your life will be, will dictate that. So if you make bad trades, or you half-ass day trading, and you half-ass this game, you don't journal, you lazy-dazzle about it, then, you're going to get lazy-dazzle results. And over time, you'll probably get frustrated and quit. Because that's what people do, right? If you're at the gym and you're working out and you're not getting the results that you want, you'll just quit. And more than likely, if you were hard on yourself and brutally honest, you probably just half-assed your exercises. And that's why you got half-assed results. And over time, you just quit. So, this game is not easy. It's not hard. But it does take some discipline. And it takes some it does take some effort and some work. And so, anyways, that's it. Rant over. This is like another 2-hour lesson. I love it. I go on these videos, and it's like, all right, I'm going to go on for 15 minutes. And the wife laughs at me because she's like, you were on there for like 2 hours. Anyways, you guys have a good day. It's Friday. And I will see you guys Tuesday. Thanks, guys. Take it easy.